Guys, something is happening in the macro. Tom Lee is a famous analyst. A lot of people respect him. A lot of people listen to him. And he has made some of the best calls. And not just calls, but he understands cycles. He understands narratives. He's very, very smart. And a lot of people listen to him, including BlackRock, including some of the smartest people in the world. And something's happening here. There's a shift happening. And they are trying to market Ethereum, and they're potentially saying that Bitcoin is going to have a slowdown. Just listen to what he says here.
Are the most successful product launch in history. And then someone says, well, if you're going to collect that much money, Bitcoin goes to the moon. But it turns out Bitcoin's risen, but it's kind of churned. I think what happened is a couple things. One is a lot of these ETFs may have been receiving in-kind exchange. So people have their crypto keys, give it to the ETF provider, and then they just stepped up their basis. So that's not going to push up the price of Bitcoin. It adds to their AUM.
It's a wash.
Yes, it's a wash. And the second is that the ones who aren't involved in ETFs, but maybe they have $10 Bitcoin. We have clients that have bought Bitcoin at $100, and now it's 100,000. They're not looking to, they don't care if Bitcoin goes to a million. They are probably sellers at around 100,000. So we're churning the base now because 95% of the institutional world doesn't own Bitcoin, but a very significant portion of Bitcoin holders are sitting on huge gains. So I think this is the churn that's happening in Bitcoin now.
Very, very important what he just said, right? Okay, because this is not bullish if you're trying to sell Bitcoin to clients. That's not what they want to hear. They don't want to hear there is a lot of people sitting on huge profits. Some of our clients bought Bitcoin at $100. They don't want to hear that because, he said there's a lot of churn. Do you really want to come in and be the exit liquidity for these people who have been sitting on these gains for so long, right? We also know that the banks want to get in and haven't really been given an entry. The banks have been told that they can't play, whilst retail have been able to accumulate. And even more recently, around 30K, 40K, companies have been able to accumulate, and the banks have only just been approved custody, right? So do the banks want to come in and pump retail's bags and everyone who got in before who's planning to, take some profits? Probably not. They need a black swan event, and they actually want the price to dump bad so they can scoop up and get a fair play, right? Get in with the rest of us. So very, very important that Tom Lee is saying this right now and saying that, there's some churn and there's probably going to be a lot of sellers around 100K. Now, are they trying to play the markets and try and get people to sell so that they can buy more? I don't think so, because look at this next clip from Tom Lee talking about Ethereum.
You're going to make Ether, the purchases that you buy through this, you're going to set this whole thing up like this. You want to explain a little bit?
Yeah, glad to. I'm still a big fan of Bitcoin because I think it is, digital gold. But what we've seen in the last, really in 2025 is the financial services industry and crypto are converging. And it really started with stablecoins, which is the ChatGPT of crypto, right? Because it's viral adoption by consumers, businesses, banks, and now even Visa. Underneath the stablecoin industry is Ethereum. That is really like the backbone and architecture of stablecoins. So it's important to create a project that essentially accumulates Ethereum to essentially protect and have some influence on the network. So that's why we're creating this treasury vehicle to buy Ethereum. The more Ethereum that's accumulated, the more secure the network is. And I think it's also sort of the architecture that future banks will have. When Goldman issues a stablecoin and JP Morgan doing it on Ethereum, as a layer one blockchain, they're going to want to secure it by staking Ethereum. So we're trying to get in front of that by creating a treasury vehicle.
And just so I understand, it's safer if you own more of it. Explain why that would be.
Well, Ethereum is a proof of stake network.
Right.
So unlike...
So you guys know what proof of stake is. So basically, so many important things were just said there. Okay, so they're basically... Ethereum is now proof of stake, and if you want to bring security to the network, you're going to have to own loads of Ethereum. Okay, so very, very important. We're probably, like he said, if these banks come along, banks have just been given custody over crypto now so they can get in. they come along, if they want to create their own stable coin, they are going to want to secure their network, right? They're going to want that security to be, especially in the US. So they're going to need to accumulate Ethereum to secure the network. Okay, so very, very important. And also, he talked about stable coins being global, and it's a global addressable market. And there is clearly a big push. We've seen the interest in Circle. There's clearly a big push to suck in liquidity from the rest of the world. And I posted about this in my Discord today. Robinhood, how funny is this? This is all happening at the same time. So the company just made a major move into tokenization, and it could reshape not just how the way we access stocks, but potentially the broader capital markets themselves. Robinhood announced a new initiative that enables European users to buy tokenized versions of US stocks. That means you can now purchase a blockchain-based representation of stocks like Apple or Tesla, with Robinhood holding the underlying asset and issuing you a digital token that represents your ownership. So we've been talking about this. If you followed my channels, we've been talking about this for so long. Larry Fink was saying that Bitcoin is just a step towards tokenization, and we want to tokenize real world assets, right? And even real estate. That is my end goal for Web3 being really adopted, is seeing on-chain real estate and fractionalized real estate. So I'm not going to go through all this because, you know, it's quite deep. They're doing a lot of things. There's a lot of implications. You know, just pause the screen, have a look through it if you want to read. But we are seeing all of this happen at the same time, and they're choosing Ethereum as the underlying L1, so to speak. And I don't really like Ethereum because it's not a retail chain. Okay, so it's not a retail chain. The reason I went with Solana this cycle, which has turned out to be a good decision, right? It went up, I don't know how much. It went up around 10x for me. If you caught the bottom, I think it done a 30x. Congratulations, because I think ETH done a 3x. So you've already massively outperformed ETH. The question is now, we can clearly see that the institutions are choosing Ethereum. Now, I always thought that we might see more institutional adoption on Solana. We can clearly see with Robinhood's move that it doesn't seem right now that Solana is going to be chosen for institutional adoption. Maybe in the future, I don't know for what reasons they've not been able to win over these institutions, but maybe in the future we are going to see some adoption or institutional adoption on Solana. Now, I don't think that there's going to be huge retail inflows into Ethereum, the token itself, but I do think after this move, after this Robinhood move, after this Tom Lee move, we are going to see a lot of inflows into ETH, maybe over the next 4 or 5 years, from institutions. And they have a lot of money, right? There is so much money in retail, but also the institutions have a lot of money. Now, if the institutions accumulate ETH to secure the network, right? So if they're like, damn, we actually have to buy Ethereum, guys, otherwise it's going to be a huge risk, right? How can we sell this to retail? Because the institutions don't just want to deploy billions and billions into Ethereum, and retail are using Solana and retail are using Sui because it's cheaper and less expensive, right? Now, we do know that ETH is working on trying to fix the fees, but even if the fee is $1 or 50 cents, no one's going to use it if the fees on Solana are at 0.1 cents, right? Or the fees on some other chains might even be less than a cent, right? So then there's going to be some sort of marketing campaign from these guys to try and get retail adoption onto Ethereum. And also notice how Robinhood are using Arbitrum. Okay, so they're not directly using Ethereum. They're actually using Arbitrum, a special element inside Arbitrum for their layer 2. And I mean, it's still going to be, you know, good for ETH in the long run, but, you know, these institutions might have their own ecosystems inside their own L2s, right? Or inside L2s existing in ETH. And I don't really know how that's going to impact Ethereum. I don't know how many inflows we're going to see into ETH. The market cap for an institutional chain is quite big, right? Look how big Bitcoin's got. It wasn't from institutions. It was actually retail who are accumulating, right? Institutions didn't have ETFs, and, you know, we didn't have all these strategic reserves and Web2 interest. It was mainly retail. There is so much money in the markets from retail. And I do worry about investing into something where I don't see retail easy access for retail, or much interest from retail. But if these institutions do really start to load up on Ethereum, that we can bet they're going to try and sell it to retail guys. You can even see Tom Lee just literally said BTC is overbought. A lot of people are in massive profits. You're probably going to see some sell pressure. And then they said Ethereum is smaller market cap. We think it's going to be the Web3 for the internet, for financial services, for RWAs, for real estate, which we can see Robinhood have already started to do, right? This is a huge move by Robinhood as well, guys. This basically, imagine having stocks in a MetaMask, right? Imagine having decentralized stocks inside your MetaMask. Imagine having real estate inside your MetaMask. Like, that's kind of the levels that we could see in the next 5-10 years. Fractionalized ownership of an Airbnb. For example, you and 10 of your friends, or you and 100 of your friends can own an Airbnb in, I don't know, Indonesia, in Bali. And you're all can see on chain your income, and it's all split equally. And if one of you wants to sell a portion of your Airbnb in Bali, you can just do it on chain through Robinhood or whatever. It really opens up the door to so many trillions of dollars coming into the markets. And also, you got to think about this whole on-chain real estate, this whole on-chain RWA, the tokenization of stocks. It brings more money back to the US, right? It sucks liquidity from the rest of the world, who haven't previously had access, can now get a MetaMask wallet and just go and get, I don't know, access to Tesla, access to a lot of the top stocks, Nvidia, etc. Robinhood also mentioned that this also gives them options, or retail options, to get invested in assets that aren't even available, right? Like OpenAI is not available to retail, and what Robinhood could do is actually buy insane amounts of OpenAI, tokenize it, and then resell it to retail through tokenization, which is crazy, because then they would have Robinhood would have so many new customers, because the only place to go and get OpenAI would be on Robinhood through tokenization. Unless, I guess, you'd have decentralized markets open up as well, decentralized pools open up. It's a whole new world that we're about to go in. And a lot of people will say to me, well, you don't like ETH, you don't think it's going to be a retail-friendly chain, but you can clearly see that we do have institutional adoption. What's the plan? It's a good question, guys. It's a good question. To me, it doesn't really matter where I make my 10x. There is always going to be FOMO. I have FOMO for getting Robinhood right now. I have FOMO for Circle. For me, it's always been the best to wait for a position of strength, and you always want to buy these news headlines. And how many times have we waited this cycle and the market has just come back to us, right? We've waited, there's been a lot of euphoria, we've waited, we bought the dip, and the market is sent, right? We've waited and we've bought the dip, and the market is sent. Like, every time we've waited, it's paid off massively. And will I buy Ethereum? I don't know, guys. I really don't know. I think it makes sense to have it as a backup plan. My theory with, if I was to buy Ethereum, was I would just dollar cost average, right? So I still expect crypto to go into a bear market. So I would dollar cost average, and I wouldn't have the expectation that I'm going to make a 10, a 20, a 30x, right? I would literally be buying it just in case as a backup plan. I'm wrong. And, this does become the next layer of the internet for the next 10, 15, 20 years. And there's huge developments in Ethereum. I wouldn't like to look back and be like, wow, I didn't buy it. Now, you guys know I actually bought Ethereum last cycle around $200. And, it went up to 4,000. It went up to 4,800. So for me, that's how I've been playing the cycles. Buy early, early or skip, right? Buy early, make money. What's the next new shiny coin? Right, Solana. Solana is the next new chain. Ethereum's had its run. And, get into Solana. Bear market, bang. Solana went crazy, sold. What's the next new chain? Is it going to be Sui? Maybe I get back into Solana. Has Solana got some upside growth? It's also going to be interesting as Solana ETF launches today, by the way. It's going to be interesting how the ETF performs when all the institutions are shilling Ethereum as well. So it's not a clear. There's no clear answer here, and I'll never get too bearish or too bullish. If the macro changes, I change, and I think that's one thing a lot of investors do about poorly is they fail to adapt to change, and I will always, I'm always going to be passionate and about Solana, but I have no issues creating a hedge, right? And for me, Ethereum would just be a hedge to see how far these institutions are planning to take it. Tom Lee is a very smart guy. A lot of people will be listening to this conversation and accumulating ETH. And we've been looking on chain over the last few days, and we can see some really interesting moves. A lot of money in Ethereum is being moved around. So, I don't know what's happening, but clearly something is going down with ETH. Does that mean we're not going to have a bear market? I don't think so, guys. I really don't think so. I still think we're going to have a bear market. I still think the 4-year cycles are going to play out. Ethereum is probably going to have a correction, just like we've had in crypto every cycle. But we do see global adoption on ETH, and it seems like everybody is choosing ETH, or the institutions are choosing ETH to operate on. So I don't think it's going anywhere. That's the key. Do we think it's going to be lower than it is? The price is going to be lower in 4 or 5 years than it is now. I don't think so, right? And that's the main thing. As long as an asset has, support, it tends to trend up over time. The question is, I don't really want to be sitting in ETH for 8 years and be 300% up or 500% up over 8 years, right? That's what I'm trying to avoid. I'm not saying that it's not going to grow, especially with institutional adoption. I just think, am I going to be able to make a 10x over the next 4 years? It's still questionable, right? Even with this institutional adoption, it is still questionable whether I'm going to make a 10x over the next 4 years, even with the institutional adoption. Why? Because we know that when crypto returns and when these applications are built on Ethereum, they're still going to be slow, they're still going to be expensive, and we know that the competition is getting better and better each cycle. We keep seeing Cardano came out of nowhere, Solana came out of nowhere. We've now got Sui, and I'm sure there's going to be chains in the future that are faster and better. We've got Caspar, who are constantly working at the moment and developing, and just popped up out of nowhere. I would like to think that there is going to be a chain that is fast, scalable, decentralized, that is adopted by retail and institutions, and that's kind of what I was hoping for Solana. So it is a little bit disappointing to see that we don't have some of these. It would have been lovely to see, for example, Robinhood launch this on Solana. And the thing we have to ask ourselves is, these are some of the smartest people in the world, and they have sat down and thought about this deeply and gone over all the pros and cons, and they would have looked at Solana. Solana probably would have been pitching their blockchain to a lot of these companies, saying, hey, look, why don't you do RWAs on our chain or whatever? And for some reason, they have chose to go with ETH as the ecosystem, or Arbitrum in terms of Robinhood. So yeah, I think I am going to have a backup plan moonbag of Ethereum just in case. It's not going to be a serious amount of money. I would rather go where we could potentially see institutions and retail. But I do think I am going to have a backup bag of Ethereum, and I'll probably dollar cost average into the bear market. That's pretty much it for now, guys. If you want to see my updates, if you want to see what I'm buying and selling, what we're doing, don't forget, head over to my X account. You can see here is my X account. Drop a follow. I also do loads of posts and updates on X as well, so you can see those. And if you want to join the Patreon, click here to join the Patreon to get involved with us. You can see all my buy and sell alerts. You can see all of my trades or my leverage trades that I'm doing. We also have a professional leverage trader in there that I pay as well. He's a day trader. I don't really day trade, guys. I'm more of a swing trader. So we have a professional day trader in there that gives his updates and calls as well. Don't forget to like and subscribe. And also don't forget, guys, everything I talked about in this video is not financial advice. I'm not a financial advisor. Do your own research. Investing in crypto is highly risky. You can lose all your money investing in crypto or anything, or stocks or anything. So do your own research. And yeah, that's it for now. I'll catch you in the next one.